right, we begin, of course, with the U.S. economy, the largest economy in the world, contracting by 0.03% on an annualized basis, according to the Bureau of Economic Analysis, in the first 3 months of 2025. Now, this is the first contraction that we have seen for the U.S. economy since the first quarter of 2022. This, of course, are the other quarterly economic growth figures for the U.S. on an annualized basis, according to the Bureau of Economic Analysis. A lot to get into. Also, earnings from Microsoft, from Meta, as well as the U.S. dollar direction over the last 100 days. Let's head over to Oklahoma City, Oklahoma, to speak with Sam Jurrens, who, of course, is the CEO of Even Heard. Sam, good morning to you. Thank you, as always, for joining us early to talk. The contraction we saw, Sam, 0.03%, for you, was that a surprise or was that expected?
Yeah, to see a negative print that quarter, it was a little surprising to see businesses kind of make some decisions that I would say led to that decline. So that was a little surprising. I would say, in addition to that, we had two other numbers, the inflation-related numbers, which actually cooled quite a bit, which showed some signs. But then we also had a pretty mixed jobs number as well. The ADP private payrolls came out too, significantly worse than expected. So there was kind of a few, I guess, surprising data points that came in. It was interesting to see how the markets, traded down yesterday morning and then ended up, slightly positive by the end of the day too on it.
Now, the Wall Street Journal broke down the GDP contributions by categories. Was there any particular takeaway for you from some of those breakdowns for the economic numbers in the first quarter?
Yeah, they did a really good job, I would say, to help people kind of visualize what happened. One of the biggest numbers in there was the net exports. So really showing how many businesses tried to front run, potential U.S. tariffs. Mind you, this is prior to the Liberation Day where, markets actually woke up and saw how dramatic some of these negotiation tactics were going to be. So from that standpoint, you really had businesses importing, kind of hoarding inventories ahead of time to try to get ahead of these tariffs as well. So it was pretty shocking to see that much. I would say the other line item, federal government, was something, you and I had actually previously spoken about as well, of seeing what I would call a technical negative GDP print and from declining government spending as well. So that one was, kind of the expected point. I was just pretty shocked to see how many businesses tried to front run this in the first quarter. I would have expected that in the next quarter.
Now, I did want to get your reaction to the reaction of President Trump during a cabinet meeting. We've also got a reaction to President's reaction from the former chair of the White House Economic Council during the Biden administration. But let's listen to President Trump first.
Core GDP, and this is, you probably saw some numbers today. And I have to start off by saying that's Biden. That's not Trump, because we came in on January, this is the quarterly numbers. And we came in and I was very against everything that Biden was doing in terms of the economy, destroying our country in so many ways. Not only at the border was more obvious, but we took over his mess in so many different ways.
All right, so that's Trump. Jared Bernstein, he wrote an article, I think it was in CNBC or so, where he was talking about the figures. And just to summarize what he said, he started off with the stock market saying it was better under Biden than it was for Trump, and that these numbers are essentially on this administration. What do you make of it all, that back and forth there?
Yeah, I think President Trump's looking at, more perception. People see a negative GDP print and just expect the economy to be contracting. It's, if you look at it, it really isn't much of his influence until you see what caused that decline. And it was majority of companies, mass importing things in order to prepare for tariffs. So in one way, the biggest part of the decline was really federal spending going down, which I think is a net positive long term. And then also that, massive net imports coming in. So it's something that, the what caused the decline was definitely from those policies, but I would still say this decline is more a technical decline. You get away from companies importing that much, and you don't have a negative print. So I feel like, it may have been more helpful for him to approach it that way rather than trying to, point fingers at past presidents. So.
What do you make of the weakness of the dollar over the last 100 days? What's the impact of a weaker dollar?
Yeah, it's the currency markets. It's one I don't trade, and I think I'm very thankful for that every day. I can't imagine having to deal with that with these headlines because, if you look at one asset class that's impacted the most by all of these tariff and trade either negotiations or potentially trade wars that could break out. Currencies are definitely one thing that is going to try to get ahead of that, and different supply and demand imbalances that will happen globally from it as well. So it's pretty surprising to see the dollar drop that much. To be honest, but it's also, the market trying to figure out where this is actually going to shake out, and currencies try to, determine better long-term balance of what's really going to happen from all this trade negotiation.
So, I mean, you've called this, a technical contraction due to the surge in imports with businesses trying to get ahead of the tariffs. What would be your outlook for GDP growth in the second quarter of this year? What do you think? I don't know it's backward looking, but what do you think? Are we going to avoid another contraction, or could it be more pronounced?
Absolutely. So I think to our comments earlier, with the negative print this quarter, that's why it was kind of surprising to see that much action being taken by businesses. So they were very prepared in a way for this kind of announcement. So I would say I would have expected this next quarter to be the negative one, dragged by companies having to, take in more imports in order to have more clarity, a better runway to make decisions. So I would have to think after Liberation Day, and then after him doing a 90-day pause on majority of countries, I would have to think if you're doing business with other countries, you are going to now import as much as you physically can. You even had news headlines of Apple taking every finished product out of India they had pretty much, and bringing it into the U.S. And that was post Liberation Day, once Trump announced the 90-day pause. And so I would expect a lot more of that, but I'm surprised how much of it we already saw. So it's just a testament to businesses reacting, and trying to be proactive, I guess, from potential policies. I just wouldn't have expected that much reaction in that quarter. I'd expect it in this quarter. So I would not be shocked to see a decline in GDP, especially if more government spending cuts come through. I wouldn't be shocked.
All right. I want to take a look at a couple tech earnings that we saw from yesterday. I think starting with Microsoft, their quarterly highlights. I guess, what do you make of it? I mean, $42 billion in revenue for cloud, overall revenue 70%, $70 billion, 13% growth, net income coming in 18%. They also climbed, their capital expenditure also spending climbed as well. What do you make of the numbers from Microsoft?
Looking at the market reaction too, they're, excited about it. The CEO's biggest mission was to push Microsoft into the cloud and get them away from pure software as well as, hardware dependence. And these results really show that they're kind of firing on all cylinders in terms of cloud, specifically, catering to a lot of the AI crowd. My business in general, we do use a lot of AI, but we actually don't have any touch on their cloud services yet. So I can't personally speak to using the product, but clearly the market's happy with it, and they continue to grow. I think it was 20% growth in cloud, which from already, the $42 billion already, that kind of growth is is pretty impressive to be able to hit that much growth on those large numbers already. They are continuing to grow CapEx too, but that cloud revenue, it's showing it's really paying off, and they're making the right investments.
What about Meta? I think the market's also reacted to their earnings, also pretty healthy as well. Average revenue per user up about 10%. Daily active people, which is their new metric now, 3.4 billion, 5% growth there. Revenues up 16%. CapEx also growing as well, like Microsoft. What do you make of Meta's performance?
Yeah, especially relative to their last earnings report, it wasn't, as amazing, I would say, as their last earnings report. Specifically, a lot of the growth in CapEx, which the market's okay with, which is good. They've been shown to make good investments for the future. They have to spend money. The augmented reality or virtual reality segments are continuing to lose a lot of money. I'm a tech person. I believe in that form, especially the AI or AR or XR, as I think they're calling it now. That part of the business, I think, is a good investment. They're just spending a lot of money on it. It's kind of amazing to see, hey, we're losing $4 billion in this segment, and the market's still excited about it. Seeing CapEx grow that much too, they're spending more than any other player. They're really trying to beef up their AI segments too. So it's something that I don't think any business has the reach that they have. I think it's almost 40% of the planet touches at least one of their products, which is absolutely phenomenal. But I appreciate a business in that position to continue to spend and try to invest for the future. So, and fortunately, the market agrees with that opinion. I'm seeing, the stock move positive on something like that. I mean, I think they hiked CapEx another 10% from their already pretty elevated levels as well. So it's good to see the market positive on that kind of news.
Sam, we're out of time. I wanted to ask you about Tesla. Maybe we'll get you up on the next time and talk about Tesla. But I do want to thank you so much for talking to us bright and early in Oklahoma City. Sam Jurrens, CEO, Even Heard. Thank you so much. Really appreciate it.